Welcome to ForexTV.com's PM Exchange. It's Wednesday, February 13th. I'm Remy Hokie. Today I'm joined by Derek Frey, head trader at ONF Futures and Options. Derek joins us remotely from Atlantic Beach in Florida. Good afternoon, Derek.
Good afternoon, Remy.
Thanks for joining us today. Well,
Thanks for having me.
In today's session, we saw the U.S. dollar gain against the yen to a one-month high. This came on the upside surprise in U.S. retail sales, but while the reaction to the headline figure was dollar positive, there's little changed in the overall outlook for the U.S. economy. So while the spec market is long yen, do you expect to see further gains in dollar yen after today's range breakout?
We do. We're a little hesitant to buy into it immediately right now, but we do ultimately see upside follow-through. We're targeting a move up to about 110 on this pair in the near term, and the near term being pretty much the balance of the month that we have here. So I guess the bottom line is yes, we do see follow-through coming. We'd like to buy it actually on another dip back below 108 if at all possible, but if not, then we're certainly going to put some in here.
Well, Derek, while we're on the topic of the yen, let's take a look at the yen crosses, especially against euro and sterling. We've been seeing significant moves in sterling yen as well as euro yen today. So fundamentally, what's playing out in those pairs, and technically, what's your forecast going forward?
Overall, we're bullish the crosses as well. The crosses tend to follow the dollar yen. Sometimes they lead, sometimes they follow, but by and large, we see follow through on those pairs as well. In particular, the euro yen looking ahead. See that ultimately pushing through 160 later, if not later this week, then early next week. And as far as what's pushing it right now, I think more than anything, it's an appetite again for risk. Remember that the carry trades are essentially a proxy for risk, and we see people kind of jumping back into the stock markets, jumping back into these carry trades. So I think the appetite for risk, or maybe it's better said that the fear of risk that we had the last couple of weeks is starting to abate, and likely to see more and more people come in and chase some of these returns because a lot of funds and firms have been beaten up in this for the beginning of this year already.
Okay, let's move on to the euro and the UK currency. We saw sterling hit a two-week high against the euro in today's session after the BOE inflation report. The bank did raise its forecast for inflation. So if you could give us your forecast for the euro against the sterling as well as sterling against the U.S. currency.
Okay, I'll start with the cable. We're biased of dips in the cable. We have been for some time. Ever since the SOT Gen lows, basically, we've been buying the pound against the dollar. We're going to continue to do so for the foreseeable future. Probably the balance of the month is ultimately what we're targeting the highs to come in terms of when. As far as the euro pound is concerned, looking ahead longer term, I would expect the euro to gain against the pound. Probably though not for the next week or two. You probably see that actual pair more or less drift sideways and consolidate. But ultimately, I would look for the euro to begin outpacing the pound probably towards the end of this month.
Okay, let's shift our focus over to the so-called commodity currencies. Overnight, we'll be getting the employment report out from Australia, and this will be watched for clues given recent hawkish RBA rhetoric. So if you could give us your forecast going forward for the Aussie dollar as well as the Aussie against the Japanese currency.
Okay, the Aussie against the dollar, we've been shorting it every time it pushes above 90. And looking for a retracement back ultimately to somewhere between 87 and 88, at which point we're going to reverse and go long in quite a big way, actually, when we push below 88. So short-term bearish, but longer-term bullish, that particular pair. I do ultimately see the highs that we had posted last year tested again towards the end of this quarter or the beginning of the second quarter would be when we see those old highs being tested, more than likely sometime in the second quarter, in the first half, I should say, of the second quarter. As far as the Aussie yen is concerned, again, that's kind of another piece of the carry trade, so ultimately I would be looking to buy dips in that particular pair, although I must say I don't trade that one as actively as all the others we've discussed. But overall, I'd be looking to, like I said, buy dips in that pair as well.
Okay, Derek, last but not least, before we wrap it up, let's take a look at the upcoming sessions. Tomorrow we'll have Bernanke testifying in front of the Senate Banking Committee, and after Friday it'll be a 3-day holiday weekend here in the U.S. So if you could tell us about FX event risk in the upcoming sessions and what you'll be paying attention to.
Yeah, Bernanke's testimony tomorrow is probably going to be a non-event. He's certainly going to raise the inflation question probably more than the stock market wants him to. But I think rightfully so. First of all, look at today's number, the retail sales number. The only positive out of it was autos and gasoline. And, ultimately, those are inflationary, especially, obviously, the gasoline. So I wouldn't say it's necessarily a good thing that consumers are spending more money on gasoline. So the inflation story is certainly going to come into play tomorrow. It's really a question of how far he takes it in his statement as to whether or not the stock market gets hit. And that being said, if the stock market gets hit on that, then the yen, the dollar yen, as well as all the crosses would come down with the stock market. We've seen a very heavy correlation between the S&P and the yen, dollar yen, as well as all the crosses over the last few months, years even. So expect that to continue. With the event risk, or the holiday, I should say, that creates the event risk on Monday for us, we're probably going to try to flatten out or pare down most of our positions going through the holiday just because we'd like to take Monday off, frankly. But ultimately, I wouldn't look for really any major fireworks to come out of Bernanke's testimony tomorrow, and if anything, I would discount it much more so than anything else.
Okay, Derek, thank you very much for your insight and analysis this afternoon.
Thank you, Remy.
Thank you. This has been your Forex News with Derek Frey, head trader at ONF Futures and Options. Now we have your equities and commodities wrap up for the day. U.S. stocks rallied in today's session on the strength in U.S. retail sales. Also, President Bush signed the $168 billion economic stimulus package that will send rebate checks to many American households. In today's U.S. data releases, the Commerce Department reported that retail sales rose 0.3% in January. The figure came in better than expected. The headline number was higher, but the figures for November and December were downwardly revised. Meanwhile, business inventories increased 0.6%. Ex-autos inventories rose 0.9%. At the closing bell, the Dow Jones Industrial Average soared 178.83 points, or 1.45%, to close at 12,552.24. The tech-heavy Nasdaq surged 53.89 points, or 2.32%, to end the session at 2,373.18. And the S&P 500 added 18.35 points, or 1.36% on the day, closing at 1,367.21. Over in the fixed income market, U.S. Treasury prices pulled back after the retail sales data report. The benchmark 10-year Treasury note fell with its yield at 3.7%, up from 3.67% late Tuesday. And the 30-year long bond declined with its yield up at 4.51% from 4.47% in the previous session. Taking a look at energy, NYMEX crude oil prices ended higher on the day. The U.S. retail sales data and the signing of the economic stimulus package by President Bush lifted market sentiment. There are also geopolitical factors playing out, with Venezuela's oil company saying it will halt sales of crude oil to ExxonMobil. At the NYMEX close, March crude gained 49 cents to close at $93.27 a barrel. Earlier today, the EIA reported that crude oil supplies grew by 1.1 million barrels in the latest week. This was a smaller than expected increase in inventories. Meanwhile, the EIA also reported that distillates fell by 100,000 barrels in the latest week, and gasoline supplies rose by 1.7 million barrels. At the NYMEX close, March heating oil futures rose 2.45 cents to end at $2.6156 a gallon. March gasoline futures added 2.19 cents to end at $2.3899 a gallon. Meanwhile, March nat gas futures fell 6.6 cents to close at $8.37 per million BTU. The EIA will release nat gas inventory data tomorrow morning at 10:30 a.m. Eastern Time. Taking a look at metals, COMEX gold futures closed out the session lower, while platinum skyrocketed into record territory. April gold fell 90 cents to close at $910.20 an ounce. Earlier, the contract hit an intraday low of $899.50 an ounce. Meanwhile, platinum gained to top $2,000 an ounce during the session. There are concerns over declining platinum supplies from South Africa. April platinum rallied $61.90 to end the session at $1,983.70 an ounce. Taking a look at other metals, March silver gained 10.3 cents to close at $17.353 an ounce. March copper fell 2.95 cents, closing at $3.5305 a pound. Today we're joined by John Kilda from MF Global. He'll recap the session in energy and also give us a short-term forecast.
Well, Remy, today the market continues to be propped up from the ongoing situation over ExxonMobil's seizure or freezing of up to over $15 billion worth of Venezuelan assets. Just moments ago, actually, the U.S. part of this action, the judge confirmed the freezing of $315 million of the seizure, and we expect the other U.K. judge and Netherlands judges to follow similarly. There is going to be a rally, and Chavez is going to be speaking to the Venezuelan parliament tomorrow, so the rhetoric should really light up now that these judgments are being confirmed, and should add to the anxiety and potentially even higher prices for crude oil, especially as a result of all this, simply because Chavez is capable of just about anything. And I think what most of us are worried about is even a direction for Citgo to run at reduced rates in terms of their refining capacity. Certainly all avenues have to be expected to be explored by Chavez over this situation. But beyond that, we did get a mildly supportive inventory report from the government today. Crude oil inventories built much less than expected. Really, half of the expectations were met. And additionally, we saw an uptick in gasoline demand. We climbed back over the 9 million barrel per day mark. Also, in terms of the continued back and forth over our economic situation, retail sales posted a better than expected gain for the month. So that also contributed to the uptick in prices. Tomorrow's natural gas inventory will be closely watched as well. As we are looking for 130 BCF withdrawal on that number. It's on the higher end of expectations, but to the extent we get another triple-digit pull from storage, we've seen for the past several weeks now substantial withdrawal amounts based upon the weather that's been enveloping the country. So while natural gas prices were off today, we're looking for them to rebound, although we do believe we're in the last throes of the overall rally. So energy prices continue to maintain their firmness and head higher despite the overall poor economic conditions, but we've got plenty of geopolitical worry out there in terms of Venezuela and Nigeria in particular. So the bullish sentiment is maintaining itself. Also, technically, we're seeing prices potentially moving higher.
That was John Kilda from MF Global with his energy commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.